Hi everyone, hope you guys are all doing well. So today we're going to go over a strategy that involves like fundamental analysis. It's called G-score investing. So first of all, um, I'd like everyone who be interested in the quantitative analytics lab. It's like you can see here, it's a research center. It's a research center that connects students to like the industry. So you can just type in UWQAL and find it here. And then you scroll down and then there's this form here. Like if you've been on this page before, the form wasn't there before. Like this link wasn't there before. So you open the form and I already submitted it, but like there's a bunch of questions here. And I think it's a really nice thing to like try to get connected to the industry. So I'd suggest everyone who's interested.
Hi,
Submit it.
I have a question about that.
Mhm.
So, is it better to apply after you take more stats and maybe math classes?
Um, you can just I'm not really sure. Like, you can just fill it out. I think he said it was like mainly to gauge interest, but I don't know if it's really an application.
Oh, I see.
He
Thanks,
said
because
there was. He said he made it seem like there's only like four people in it right now or something. And he said
okay.
like as he gets more people to sign up, he can go out into the industry to get, I guess, get
Oh,
projects for it or something. That's what he made it
Mhm.
seem like he was saying, but I don't know.
I see. Thanks. I was thinking about like if the acceptance rate is pretty low or something, if I need to take more
It's
classes.
it's not like something like that's meant to be prestigious or anything. It's like open to anyone, like any major, and it's really meant to like connect undergraduate students with different companies for like people who like demonstrate interest. I'm pretty sure it's not gonna be like based on how good you are.
Yeah, okay, thanks.
Okay, so there's a few concepts we're gonna use. So we're gonna use a deck. So deck stands for double-ended queue. Okay, so let's make a deck equals deck. And so here, you can specify a max length equals 3 to like make sure that there's only 3 things in the deck. So let's just look at what this deck looks like right now. It's like empty right here. So let's add 3 elements. So you can append to either side because it's a double-ended queue, but if you're just going to use it as a regular queue, be sure to only append it on one side. So let's look at that. So we've added a few elements, and let's see what it looks like now. So let's add something. Let's add more. So we have max length 3, and we have 3 items in here. Let's just prove it. It is 3. Okay, so let's add something like 100. You can see that it still only has 3 elements. Like everything that was in there, the 0 was just. Yeah, let's see. Here, let me just make it. Let's just see. So we can see here, like the 0 got pushed out, and the 100 comes in. So this is a great way um, to like manage data. Like when you only want, like say you have some sort of like algorithm that uses past 50 points of data. This is a great way to manage the data, so you don't have to like make a list and like do all these like strange things. Just use this deck to make sure that you can get the 50 points of the most recent data. Okay, so another thing I would like to talk about is dictionary comprehension. So like list comprehension. So you can do I for I in range 10 and just get 1 through 9, or you can do this. So something that's interesting is that we can actually do this for dictionaries. So let's just do this. So So let's just do ij for I comma I squared. Oops. In data. Oops. No, that's wrong. So I squared. There. So we can see here we have like a dictionary. So this is the key and this is the value here. So we just have like for every key we get the squared. We get the value squared. So let's just do something. So let's just call that D. Okay, so like let's put in D. Let's see here. So it's a pretty powerful tool. We're gonna be using it quite a few times in our algorithm today. Okay, so I want to go over how like insights work in Quant Connect. It's fine if you don't know too much about how 9 1. Okay, so maybe let's do 10. 10. Let's see, calendar. So 6. Okay, so self.add folio construction. So what insights are is it like based. So insights have a few properties. One is the direction you want. Another one. Yeah, it's mainly and the time period. So based on the direction, it will take that position and then liquidate that position after a certain amount, after the time period specified. So that okay, so let's add equity spy. We have spy here. If okay, okay, so we're just gonna emit an insight on a random day. So self.emit. Yeah, let's just make it a list. So insights equals append. So let's see what an insight looks like. So insight.price. So let's do for spy because we added spy. Whenever we want to do something with equities or like a asset in Quant Connect, what we have to do is add it first. So okay, so let's specify the duration now, time delta 1. And the default is days. So like you can do days equals 1 or you can just do 1. And let's specify the direction. So insight direction dot up. So that means we're gonna buy it, and after 1 day we sell it. So let's look at this. Oops, that won't work. Like it hasn't been detected. So let's just set this one. And we also have to emit these insights. Oops. That's actually okay, so while we're waiting, let's talk about some other stuff that you might see here. So it's a QC algorithm object. There's like a few like stuff. There's a few methods. You can look at this API tree. This time in here. There's like a few methods like add equity. Let's just look at that, and it tells you everything. Like not all methods are documented in this API tree, but some are. So let's look at the orders. Okay, so this is backtest, and there's a bunch of information here. So this is the equity curve, and the number of insights we minted 1 on the 10th. The assets, and then we can also look down here. There's some information here, like statistics, like drawdown, a bunch of stuff. So let's look at the orders. So we can see here that like it doesn't mark it on open order, because the daily bars, like they're consolidated to the like daily. So every midnight we get a bar of daily data. So like a bar of data includes OHLCV. And if for those who don't know, that means it's open, high, low, close volume. And so we do it here, and you can see like it holds it for 2 days, like it's whatever, how much time we specified plus 1 day. It's kind of weird because we're using daily insight. You can see here, like we didn't even tell it to sell. It just automatically sold after like the time delta was up. So let's also look at what, so a lot of research in finance involves looking at fundamental factors. So ad universe. So what ad universe does is it creates a universe of stocks based on either the functions or like a class, universe class we give it. So let's just give it 2 functions. So course filter and self.define filter. So so these are the methods we specify. So course filter, self course. And so these course objects have like a few fields. One is the symbol. And so the symbol objects is how like, it's sort of like a ticker. But the reason we need to use symbols is because these tickers can change over time. So what these symbols do is it like keeps it like is able to keep track of the changes. So when we use the symbol objects, we don't have to worry about like the fact that the tickers change. Okay, so of course, so let's just turn it into a so course. Let's just take like some random element and let's just put, so you can put breakpoints here and it automatically debugs when you run it. Oops. Okay, so let's also create a find filter. So what these are, so these functions, like we get like some universe through here, and what we can do is filter it down based on some criteria, and we return it. So this is great for fundamental investing because like we can narrow down our universe to like stocks that have a certain amount of volume, that have like certain prices. Like say we don't want to buy penny stocks, so we only buy stocks that have prices of $5 or up, or we want to allocate to ones that have the lowest PE ratios. So these are all possible things. So okay, let's just look. C dot. Break here. Let's just run this. Okay, so while that's loading, let's talk about some other methods. So set cache basically sets the amount of cache we start our account has. It's not very interesting. Set start date sets the first day of the backtesting. So let's look at this LS object. So we can see, so dollar volume, field fields. So that's dollar volume dot price, get the price of the asset, well, like 1 share. And so course filter isn't very interesting. Like, so say you have like some sort of like gaps trading strategy. You probably could just get rid of the find filter, because like if you have a gap trading strategy, you probably don't really care about the fundamentals of the company. So you could probably just create a universe of like 10 stocks that have high volume so that you get good liquidity. So if you manually code in like some symbols, the problem is that like over time, some of these symbols might get dislisted. But if you have a universe that constantly evolves over time, you get rid of, you don't face the problem of like some stocks getting delisted. So that's why universe exists. Well, like probably like for something like SPY, probably might not ever get delisted, but like some medium-sized companies, that's definitely possible. Okay, so let's put our breakpoint here, and let's see. So continue. Okay, so in the find, there's like a different fields that you can access, and these are all Morningstar data. This is like Morningstar fundamental data, so market cap. So let's see what fields are available to us. So let's go to Quant Connect, the API, docs. Let's type in fundamental. Let's look for fundamental. Source spot. And oops. And let's look at like what happens if we want the asset, something related to the asset. So let's type an asset. Whatever, let's just take this field. So what we do is we take this field, let's just copy that, and we can like, let's see it. So and it appears that it doesn't have this, maybe it's either 0 or doesn't have this data. So let's just shit. Yeah, let's do ROA. So you can like test out these like, oops. Okay, well, whatever, you get, hopefully you guys get the point. So like these find objects, so these are like, this is a collection of different find objects, and each find object has like different fundamental fields that you can access by like looking it up. Like if you want ROA or you want like some cash flow information, you just copy this and you can access it on the find object. Okay, so let's go into the strategy. Okay, so let me just talk about like why we're using Quant Connect for our club. One reason is that we have pretty good relationships with them. Like I've interned there. Our advisor is pretty good friends with the CEO. Like, and also Quantopian. I don't know if you guys know about Quantopian, but Quantopian's dying because like, well, don't quote me on it, but Quantopian doesn't support live trading, while Quant Connect does. You can clearly see here we can go live, but Quantopian you have to like make it super, it's like super hacky that it's not really officially supported. And another platform, Quantiax, they also don't support live trading. And also Quant Connect has like a great community. Go to community. If you guys ever need help, feel free to like just post it here, like put your question here. And like there's people paid who are like who answer your question. Also, the data is pretty good. It's just a lot of recent. And also they're headquartered in Seattle, which is like, they're like just a few miles away from University of Washington. So that's another reason, because they're local. Shit, why am I here? Okay, let's close this. Okay, so let's go through this line by line. So this is not very interesting. The start of the backtest date, the end of the backtest date, how much money we have in our account, not really important. Alpha stream brokerage model. That's like if you're doing competitive, like this competitions. So let's Quant Connect, alpha streams. Oops, let's call it typical. Yep. So this is like competitions weekly. Like fun fact, actually last year there's a huge competition that had this payout, like in awards. I would have participated, but to be honest, like I wasn't quite knowledgeable. Okay, so there's different broker modules. If you're like familiar, there's like you can use Alpaca. You can use the Alpaca brokerage. You can use IB brokerage. You can use like there's a few brokerage models. There's quite a few different brokerage models that are supported, and this one's good for if you're doing competitions. Constant alpha model. What that does is, if you remember so what that it basically allows us to buy and hold. So whatever we return here. So this is my fine filter. So whatever we return here, it'll just buy and hold all of those. Equal weighting portfolio construction manager. What this allows us, this isn't too important. Like, say you're like a giant fund and you don't want to like buy a million stocks at once. So you can create like some execution model that like buys over the like 5 hours, for example. But if we don't have to worry about it, because like if you have that much money, definitely hit me up so we can start a hedge fund. No, I'm just kidding. We probably don't have to worry about that, and it's just pain. Like, let's just not worry about like liquidity and stuff like that. And what this does is it like sets equal portfolio allocation to every stock that we hold. Okay, so this is the same thing as before, except like we wrap it inside a function. It doesn't really matter. And we also use add universe selection instead of add universe, and select. So this is for the algorithmic framework. So there's two types of frameworks. There's a classic and classic, where it's just like if this happens, you buy. Okay, never mind. That's for another day. This is like the algorithmic framework version of add universe. Okay, so this is the resolution of the data that we want to have, and we want daily resolution data. Okay, this is kind of boring. Okay, let's try to speed this up. So there's like different resolutions you can have your so we subscribe to data like in the stocks that are return of all the assets returned here. So we can have like you can subscribe to like minute data, second data, hourly data, but we just choose daily data because we don't really use the data, and this is the max resolution, so that we don't have to go through as much data, so that like we don't receive as much data, so it speeds things up. Here we're gonna have like a dictionary of different rolling windows for different like stocks, and that is because we want to record return on asset values. Okay, current month. Okay, let's just whatever. It's kind of boring. Okay, so let's just look at this. So what we do is we get all the symbols that have fundamental data here. Okay, so the interesting stuff is here. Okay. So here, what we do is we try to get all the technology stocks. So the sector codes. So we get technology stocks, and if it has 3-month ROA data. And so what we do is we iterate through the these securities, and we like if we don't have like a deck in our dictionary, we just like add it as a key and create an empty deck, and then we append this our return on asset value. And the reason we want this is because we want to measure the variance of the return on assets. And one of our factors that we want to look at is where the variance of the return on assets is for a given security is less than the median variance of return on assets of different securities. And the reason we want this is that so we can get like steady return on assets. We don't want like super volatile return on assets, and that is just because of the and the reason we want steady return on assets is it is a sign of good sign of strength. Okay. Let's just ignore all that. Okay, so now we want to look through securities that like make a bunch of criteria. So what G-score investing is a type of factor investing, and factor investing is going through a bunch of different traits and buying the stocks that meet different interesting traits. So, however, like sometimes it can be zero, and we want to make sure that it isn't zero so that we can analyze that statement. So like maybe some companies don't have any capital expenditure for some reason, like I don't know why they would, like, or they don't have any assets. I don't know. We just want all these criteria. And then what we do, okay, so here, if you remember earlier, we have like this dictionary of different decks, double-ended queues. And so what this does is it gets the variance of all the double-ended queues, and only if it is full. Okay. Let's keep scrolling down. Okay, so we get the median. We want the median value, and then we just store it there in this variable. Okay, so then we want to look at the return on assets for 1 year, and we record the median. We do the same thing for the cash flow return on assets, the R&D to market cap ratio, the capital expenditure market cap. So these are all factors that we want to analyze a company for. Advertising to a market cap. Okay, so, and then we want to sort all of these fine objects by their book to market ratio. So there's an anomaly there's a book to market anomaly where like usually you think like companies that have high book to market, which means they have a high amount of assets relative to the market cap of the company. So like intuitively, you might think that those companies do better because they have a lot of assets. However, because companies that have very little assets but high market cap relative to their low assets, they become riskier. And investors want to be compensated for their risk. So what happens is that companies that don't have a lot of assets, that may even be in debt, but they have a high market cap, those stocks tend to grow more because of the risk associated. And some financial theories state that like the more risk you take on, the more you should be compensated. Okay, so what we do is we sort it so we get the lowest book to market ratios, which means that we have the very low assets relative to the market caps, or even negative, and we get these, and then what we do is we go through them like only the tech ones. We only want the ones that are tech because we're gonna compare like stuff to the industry median of tech for a given tech stock, and we compute your G-score. So there's like different factors. So what we do is we go through all of these like things, and we compare it to the median. We see if it's great. We see if it's like greater than median, which means that stock is better relative to peers. And so like with these different factors, there's around like 7. So in the paper that I'm implementing, there was 8, but one of them I couldn't actually implement, so I just chose 7. So we only have 7. So, and then what we do is we go long on the stocks that have like okay, so we can see here, like if like a condition is met, we add 1 to the G-score. And so a G-score can range from 0 to 7 in our case. And we only want stocks to have G-scores of greater than or equal to 5. Okay, let's run this. Actually, let's not run this. Let's just find a back test. Oh, let me just go to where like where my like pull request look. So I like, if you wonder like how these strategies I talked about this earlier, but like for anyone who missed it, like how these, this is mine, this is one of mine, how these things get here. I make a GitHub pull request with a bunch of like HTML files. Let's find the backtest. Backtest takes like 30 minutes, so let's just get that. It does okay. It actually so like if we're investing, so since we are doing tech stocks, it makes sense to do the Nax 2QQ, which tracks the Nasdaq 100, which is a bunch of tech stocks in there. It doesn't do as well as the QQQ, so the strategy is kind of useless, but it's a good way to learn how to apply fundamental investing. So hopefully that all made sense, and if you guys have any questions, I'll take this time to open it up to questions.
Yeah, I've got one.
Mm-hmm.
Yeah, so if you scroll down looking at the G-score when you're computing, you're looking at if it's a higher than the median, right?
Yeah, for some of these things, like for like the return on assets, we want the return on assets to be higher than median. We want the cash flow from return on assets, which is basically the same thing as return on assets, except it's instead of using like the earnings to calculate it, use the cash flow metrics to calculate it.
Right.
We want companies that have like high capital expenditure, high R&D, high advertising. And if they're able to beat the median in all of these things, that means that companies like, and these are all like adjusted to the market cap. So you can see here, we divide it by the market cap, we divide by market cap. So if they are able to beat the median on all of these ratios, then the company should theoretically be pretty good, right?
Right.
They're fundamentally sound
but
financially sound.
But you do want the, hold on, so with the variance though, you want that below the median, correct?
Yeah.
The variance of ROA. So where?
Oh, actually, yeah, this is actually incorrect.
Yeah. That's what I was saying. So like, you would want the variance to be below the median. So you need to have that first one. Yeah.
Oh shoot.
Yeah, because that would mean that you would want. Yeah, because like that's giving points, or that's rewarding high variance companies instead of low variance right there.
Oh, nice catch. I just deleted that, and I just like.
Yeah, I see.
Right,
yeah, good call.
Wow, so I know you definitely were paying attention.
Yeah.
I'm just kidding. That was a joke. Okay.
Yeah. Now it'd be interesting to run the back test. I mean, to see
okay.
just to see how much that one variable makes a difference. Just because, like, before you're rewarding high variance companies. So sorry, I'm eating.
Oh no, it's fine. Yeah, it's like it's like sort of dinner time for some people. Oh yeah, it takes a while because like we need 12.
Yeah.
Yeah, let's just keep talking while it runs.
I notice.
Okay, so for those who aren't like financially, like who don't know the finance, okay, so let's go through what each of these. So ROA I already talked about that. So I already talked about it. So R&D stands for research and development, and that is the money a company spends on innovating, testing new stuff. Okay, yeah, that's about it. Okay. CapEx stands for capital expenditures, and that is the amount of money that a company spends on equipment or anything that helps produce revenue. Advertising, add to market cap. Ad stands for advertising, and that is how much company spends on advertising. Okay, let's look at some weird. So we might have some weird Python stuff here. So sorted, that is a Python function. So let's just do. So numpy.random.int. Let's get five values. Oh shoot, I didn't point it yet. Oops. By shoot. let's do info random. Okay, so x for x in okay, let's do random dot rand int. Let's make it 0 to 10 for x in range 10. Let's just get like 10 random numbers. Okay, there. Okay, let's see what the sorted does. So sorted, let's just do sorted. Let's just call this add B. So it sorts it. What happens if we have a dictionary then? So, oops. Let's make this into a dictionary. So like DT for dictionary. I don't know. Let's use what we learned earlier. So I squared for I and D. Okay, let's look at it. Okay, so what happens if we wanted to sort these dictionary entries by the value listing? So sorted dot values. No items. So we can specify key equal lambda. Okay, and then like x, and then what? So how do we access this? 1. So let's just look at how. Let's just look at what that is. It's just a list of like it's just like the key value pairs in like two tuple pairs. So and you can see here we sort it by this value. I mean, either works. We get the same thing if we sort it by the key. Okay, so that's what sorted is. Okay, so what else is in here? Here, let me share the code with everyone so that everyone can see it. I closed it earlier, didn't I? If you ever anyone wants to share it, okay, so chat. Oh no. Okay, so here I posted the code in there. Everyone wants to look at it. Okay, so what this does is like if we already had a universe. If we return universe dot unchanged, it just keeps whatever we returned earlier. Like, just our universe doesn't change. Oops, we have a bug. Let's go debug it. Okay, does anyone have any more questions? Oh shoot. Oh, I try to access the float as a dictionary object, so let's just turn that. Yeah, this is just a value. Okay, does anyone have any like questions on like the finance side or anything? Or the code or anything? Well, let's find this paper I use. So G-score best. I'll post the paper. Chat. Where's my chat? Okay, there. There's a paper there. So let's just look through this paper. And like when we look here, I'll just show you guys how like I sort of like I don't know convert these papers into like code. So blah blah blah. Let's look for G-score. Okay, so G1. So look, ROA is greater than the contemporaneous median. G2. G2. I mean, this is quite simple, actually. It's not very mathematical, so it's kind of like I can translate it quite directly. So part of my work is trying to like filter out what all the stuff that isn't like important for the algorithm implementation. This one was pretty easy because I could just look at the italics text. That's how I figured out for this one. I mean, I read the whole paper. It's just through that. R&D, capital expenditure, advertising. We talked about that earlier. Let's see the chat. Did anyone ask any questions? Nope. Okay. Does anyone have any more questions? Okay. Let's see if they. Okay, so the algorithm, the QC algorithm object has a field called time. It's basically datetime. So like a datetime. Here, let's just create a datetime. From datetime, datetime.now. Let's just call it DT for datetime. So let's look at DT. So we can access the different fields like dt.year, dt.month, dt.day. And you can see here we access the self.time is this is a datetime object, and we can access the month. It doesn't really seem okay. It doesn't really seem it. You want to ask more questions. So you guys, so the meeting. Okay, wait, no. Let's also introduce our officers. I don't know if you guys saw it, but Franklin here. If you want to introduce yourself.
Yeah, sure. Hi, my name is Franklin. I am a second-year student in the CFRM master's program. So I'm wrapping that up this year. I'm actually taking Professor Tim's systematic trading class this quarter. And so past couple summers, I've been working in a couple different quant asset management shops, like in the research department, mostly looking at, longer term factor investing, but yeah, happy to dive in a little bit more about any of that if you would like, and looking forward to going over some workshops and reviewing some more of the maths behind some of these trading strategies and papers and stuff. So.
And Franklin is the head of the quant. Head of his title is the head of quant. Head of quant. Yeah, I don't know. Okay, wait. How similar was this algorithm today? Whatever.
Where was what?
How similar was the algorithm today to like what you do? Is there any similarities?
Yeah, I mean some similarities. So most of what I have done, in like actually, in the workforce is it's mostly like longer term investing. So it's not necessarily looking at, daily frequencies of information to, day trade, but it's more on the long term side. So creating different factors like if you're reading quantitative finance, you'll see factor investing everywhere. So this past summer, I've been working on momentum strategies. So the idea of momentum is that stocks that have done well in the past 12 months or however long you look back are going to continue to do well, and stocks that have done poorly are going to continue to do poorly. And so it's really looking at more longer term strategies, where you're holding securities for, a month at a time.
Okay, so like this algorithm like holds for like a year. I think a year. Can't remember. So like are these factors like similar? Like looking at the fundamental factors.
Yeah,
like
yeah,
the CapEx and stuff like.
Absolutely, yeah. So like right now, for the firm that I'm working at, we're looking at a bunch of different measures of profitability for across sectors and sub industries. So instead of just looking at, net income or something like that, or just some of the simple metrics, you'd have it more broken down specifically into, like different measures of profitability for the different industries. So yeah, so return on assets is a big one that we're looking at. I mean everything is cap weighted, and making sure that you're looking at the right peers. So yeah, so I mean, it's very similar to this in the real world.
Okay. Yeah. It's probably going to make more money than this too. Okay. Thank you, Franklin. Next, we also have Edward Tan. He's the head of the AI for our club. I don't know if you want to introduce yourself.
Yeah. I'm Edward. I'm a senior in CS and math. I also used to be a finance major. When I was first getting into UW, I was pretty interested in this quant stuff. My background is mostly in software engineering, and I'm currently getting more into machine learning related research. I'm on a research team right now doing natural language processing. Probably get a paper out in the next couple months. And yeah, if you have any questions on just general machine learning, deep learning, or like the math and stats behind them, hit me up for help. And yeah. So.
Okay, thank you. Okay, so maybe like, yeah, I started like 7 and I finished the algorithm in like 30 minutes. Okay, 40 minutes. Okay, so I don't know, how about, do you guys have any questions for like two of our new officers? We also have Simon. He's like the VP. He does like administrative social media. He's not here today.
I guess I have a question. Like what kind of like math classes would you recommend taking like in your undergrad sort of to kind of understand stuff like this better?
Like me? Or ask me? Is it for me?
Or I guess anyone can answer that.
Or maybe since Franklin has some.
Yeah, I guess.
Yeah.
Okay,
I'll take a crack at that one. Yeah, so in undergrad, I was a math major. I studied math and finance in undergrad at University of Alabama before coming to UW in the CFRM program. And I would say really for quant finance, you're gonna, ideally take the calculus sequence, get some probability theory under your belt. Definitely linear algebra. You're going to be using matrix algebra everywhere in quantitative finance. If you want to get into some of the more derivative heavy stuff, I would try and look at some stochastic calculus. But yeah, really definitely get some stats classes, probability theory, and linear algebra. Would definitely be up there.
Yeah, thanks. Because I was gonna apply to the undergrad computational finance program, and then I was thinking of like kind of doing more math and stuff like that, like thinking about doing a math major also or math minor or something to get some of those classes.
Yeah, I would definitely look at that. So what I would do, is look at the, let me just see if I can pull it up real quick. I would just look at the masters or like the recommendation for the CFRM. I saw on the website at some point the like recommended classes for applicants. It reviews like what they expect for admissions. Hold on, let me see if I can pull it up real quick. Let's see. Yeah, so here is here is what the graduate course recommends. So these are the like minimum admission requirements. So, and then that's specifically, so calculus through partial differential equations, matrix algebra. So that's your linear algebra classes. And then some optimization courses. Yeah, and then probability and stats is really what they're looking for.
Sweet.
Yeah.
Yeah, bouncing off of Franklin here, I can give some like specific course number recommendations if you want.
Yeah, because I was kind of digging into it too. So I've taken 308 here, and then I'm doing 307. And so I was just like, I'm gonna apply like the next quarter to see if I can get into the major. So it'll just be like easier to take the classes.
Yeah.
So I was just like the probability sequence, I assume would be like what he's talking about, and then I guess I don't know what other than that, but
Yeah, I guess in addition to that, you have math 491, 492.
yeah.
They get into some of the more stochastic processes and stochastic calculus. I also recommend
Wait, can you repeat
math.
that? Here, let me write it down. So, like people who are watching this, math what?
Yeah. So 394, 395, 396 is the probability series. They're jointly offered with the stats department. Yeah. 491 and 492 is the stochastic processes and stochastic calculus series. Obviously through 8, but I think taking 380 is also really important. That's the new offering, continuation of through 8. They get into some more advanced matrix operations like singular value decomposition. And I think, right, Franklin, would you agree that's pretty important? Oh, you're muted.
You're muted.
Yeah. So one of my classes I took with Professor Nathan Coots, and that was a massive portion of the class. I mean, it was all about PCA, SVD, and really breaking down of a lot of different data science methods and a lot of the math and the linear algebra behind it. So yeah, I mean, yeah, you honestly can't get enough linear algebra.
What programming language? I guess I know there's like the 3 up there. Would you, like, out of all of them, would you say like one more?
So when at least for the CFRM program, when it first started, I know it was super R heavy, but now they're pretty agnostic about, I mean, just get the information. So I tried to use Python as much as I could, just because that tends to be what industry is leaning towards now. My entire, I mean, I'm working exclusively in Python right now for my current job. But I would say, I mean, MATLAB is one of my courses, Nathan's course that I took. It was MATLAB heavy, just because that's what he uses. And then I took one course that was, it's like an undergrad / grad course, high performance scientific computing, and that was C++. But I mean, I would say if you want to be, I mean, like for resume purposes and just like to add to your skill set, I mean, I would probably focus on Python, just because that seems to be most universally accepted in a lot of different companies and corporations and stuff.
Awesome.
Like, I think part of it, like, it depends on what side you want. Like, if you want to be on the execution side, you definitely need to know C++ and C.
Right, exactly.
And FPGAs, like, but if you're like research, like the slow stuff, no, I'm just kidding. Anything like that's not like where picoseconds don't matter, definitely learn Python. Like Java's, I don't know. I don't know why people use Java in finance.
Right. Yeah. It really seems like from the applications and everything that I've been looking at, like all of the higher frequency and lower latency that you need for different trading strategies, like higher frequency shops are looking for more C++. But I mean, so the shop that I'm at right now, I mean, we're investing on like years instead of, day trading or intraday trading. So Python is more than enough for what we need.
Oh yeah, I saw some post about like how HFT interns are making like $80 per hour. I'm like, holy shit.
Yeah, I mean, that doesn't surprise me.
And like freaking interns at Jane Street, and like we're making like 200K. Oh my god. Yeah, so if you guys succeed, you guys will be rewarded very nicely. Even in internships, like these interns getting paid more than I think the median software engineer. Like, what the hell? It's pretty weird. It's pretty whack.
Yeah, I can give some tips for interviewing with those guys as well. Not like tips for passing, but more so just like what kind of questions they asked, and I can do some example questions.
Okay, so how about this? Like anyone who doesn't want to like do any more Q&A, like this workshop is over. Like it's been over for a little bit. But for anyone who wants to ask more questions to like me or our 2 new officers, definitely stay around. So are there any other questions?
I guess I got one last one. So then so I'm not like in the CS department. So I'm doing 143 right now. And then I guess after that, would I just try and like self-study the Python stuff? Like,
Yeah, Python's pretty easy to learn. Like,
yeah.
But Pandas and like the other stuff might take a little more time to learn. But I have like videos. I keep advertising this. Like I show you guys. Wait, hold on. I have a playlist. My slides here. It'll be easier if I go to my slides. Oops. Like I have a playlist of like a bunch of Python stuff. Oh, right here. I think taking 143 is nice, but it's in Java. Well, like once you know Java, learning Python is a lot easier because like.
Yeah, because I don't know anything, so I thought it would just be good to learn like the basic sort of stuff like that, and then move on from there.
Yeah, I mean, I would say there's plenty of online resources to learn Python. I know. I mean, also if you just like hop on like HackerRank or LeetCode, I'm sure that they have enough to get you started and get by on some of that. Let me also, like, while we're here, I found a good interview primer for quantitative finance in general that let me find, and then I'll drop it in the chat, and we can like repost it in the main Discord page.
Yeah, that's a good idea. Here. Yeah, this is super messy. Yeah, let's post all this.
Yeah, and then I'll post this GitHub page in the Discord.
Yeah, I'll just put this in the Ask Us Anything.
Yeah.
Wait, no, don't we have a workshops? Do we have a workshops Q&A?
I think there's one down there. Workshops Q&A.
Oh, I found it.
Under fun. Yeah. I'll drop it there. I'll drop this primer there.
Oh yeah, I also have like a resources. Let me post it again.
Yeah, is there
Excel?
This one, or
I've posted it a few times here. Well, this is not really interview stuff. It's more like general stuff, like useful stuff, not interviewing stuff. Because some of the no, I'm just kidding. The interview, what you do on the job might be quite different from what you do.
Yeah, definitely.
But like, if you like just want to learn this field, okay.
Did you, Franklin? Did you ever take any of the undergrad CFRM classes, like the 405, 410, or 415 stuff?
Yeah, so I went to University of Alabama for undergraduate. So I didn't take any of the undergrad courses, but actually so I heard about the CFRM program through one of my professors at Alabama my senior year, because he got his PhD at UW. So he taught one of the econometrics classes from the CFRM program just at Alabama. So I didn't take any of the undergrad CFRM classes, but I mean, if you're interested in quant finance, that's a great way to go ahead and start learning about what the field is like and tossing that on your resume.
Yeah.
I mean, I would recommend the econometrics classes for sure. I mean, that's going to be a lot of time series analysis, which is going to be very useful in the field.
So I'm doing the CFR minor, so I can speak to 405 through 415. Those are the ones I've taken. I'm in 420 right now. I would say, generally speaking, 405 and 410 are just math fundamentals. So 405 mostly just touches on, just is like a calculus review, linear algebra review. You don't really learn anything finance specific there. 410 is just the same thing as math through 94. It's just some probability and stat stuff. 415 jumps right into the math behind some of the other securities. And I think that if you don't have like a decent knowledge foundation of what at least the securities do, you'll probably fall behind a little bit in 415. It's pretty fast paced. 420 seems to be like a lot of programming in R, is what I can say right now.
Yeah, I think, I want to say, I don't know what CFR and 420 is, but I want to say that was like the course that I took in undergrad at Alabama. Yeah, like Introduction to Computational Finance. So I'm pretty sure like at the end of the quarter, you'll be like making efficient frontiers with like you'll be like pulling data, making efficient frontiers, and like building portfolios.
Okay.
Well, I don't. The what efficient frontier? I don't believe. I'm against the efficient frontier.
Well, yeah. I mean, but this is the kind of that's the kind of things that you'll be doing in that class, I think, or towards the end of the quarter. If it's the same class that I took at Alabama.
I am personally against the efficient frontier and the efficient market hypothesis. Just saying.
Right.
Okay, that's kind of random.
Yeah, I mean, like you wouldn't be trying to trade if you weren't.
Yeah, schools should not teach these things.
If you get into phosphate, that's all they teach.
Really? It's criminal. Yeah. Oh, why'd you switch over to finance? I mean, why'd you switch over to like CS from finance?
So I was originally CS and finance, and I dropped finance for math because when I was recruiting for quant companies, I realized that they don't actually really care if you know any finance at all. They think that all finance that you learn in school is just things that they have to get rid of. Like, yeah. So there's that.
It's evil ideology.
Yeah, I would say the heavy quant shops definitely just care more about your hard skills instead of like if you know what CapEx is.
I mean, it's like everyone can learn what a CAPM is, but not everyone can learn the math behind some model, right?
Right. Yeah.
And I heard like another thing is like because like the STEM field, like finance isn't really like they say finance isn't like really rigorous. And like so, if you study like a STEM field, you're definitely tested on your studies and learning skills. But if you're in finance, you don't really get tested on these skills. So they just want smart people. Like sometimes like some of the stuff, like some people can be from a major that's quantitative, but they don't really use the stuff on the job. But it's just because it's a rigorous class. They learn the rigorous stuff. So we can study. Oh, we still have. Okay. Do you guys? Are there any questions?
Yeah. So I guess do we have a calendar going for what we want to be doing over these next couple quarters? Like, do we want to have like a quarter-long project? Do we want to? I guess like, do you have an idea of like what the scope of these next couple weeks are going to be looking like for either projects or workshops?
Yeah, that's a good thing. Not really, but we can definitely figure that out. So in the office channel, we can figure that out later. Yeah. If you guys want to help me, if you guys want to like help with deciding this calendar, definitely pitch in.
I think we should also
guys
do
want-
like a survey of what people
Survey.
want to see in the workshops.
Yeah, definitely.
Oh yeah.
Like, I think everyone should have a baseline understanding of certain things.
Yeah.
And maybe some of those things are glossed over in previous workshops.
Mhm. That's true. Well, I had a vote earlier. Oh yeah, that's today's. Okay, that's today's workshop.
Right.
Okay. Yeah, nobody voted for that one.
Yeah, that was the one for today. Yeah. If you want to put up a survey to see what people are more interested in for next week, I mean, to have like the weekend to
Yes.
so we can get some materials ready for next week. That'd be great.
Oh yeah, I already have like a few strategies. I'm gonna do this one next one. I think this one is pretty interesting. Like, and the sharp is like greater than 0.3, so it's an academic paper that doesn't just do crap. Okay.
But are you going to start with what a SVM is?
SVM?
Yeah.
Yeah. Well, okay, I'll be honest. I'm not like. Wait, you know SVMs, right? You do machine learning?
Yeah.
Maybe you could teach what SVMs are.
Okay. Maybe I can do that at the beginning then.
Yeah, definitely.
Mm-hmm.
To be honest, I'm not. I know how to plug it into sklearn. I'm not. I think I understand it, but
Yeah, I have. I've got some notes from my ML class this past quarter on SVMs. If you want to. If you want to.
Is it a CFR class?
Yeah, it was ML for finance, like CFR 521.
Okay. Stop people here. Are there any more things you guys want to talk about? It's been over. Okay.
Yeah, no, I think I'm good. I mean, I guess we can follow up.
Yeah, we have this Discord channel. So if you guys have any more questions, just please put it in this Discord channel.
Cool.
All right, sweet.
So far, okay.
Thanks for the meeting, man.
Oh yeah, thanks for coming.
Yeah, it was good information. It's super helpful.
Oh, thanks. I try my best. Okay, see you guys. Okay,
see you.
I'm gonna close the meeting. So.
Have a good one.
Thanks for coming, guys. Okay.
Mm-hmm.
Bye.